which Salt Lake City is going to be the host for the 2015 convention next year. Is anybody here planning to go? Yes, ma'am? Of course, Hannah will be there. Please, Kate and I'll probably be at the CPG booth, so please come over and say hi. And if you want some personal recommendations of things to do and places to go, let me know and I'll be happy to help you with that. Really glad you guys are all here. It's the end of the day. I'm sure your brains are wiped out. But you all are going to get some absolutely golden nuggets for having lasted the whole day today. And we're going to have fun, I promise. It is a long presentation in the sense of the kinds of things that we want to cover. You can see there's a list on the wall here. But really, we want to make sure we cover what's important to you. So ask questions as you have them. And if we get to the end of the time and we haven't covered something that you really want to cover, then just let us know and we'll take care of you however we need to. Just to start out, I want to make sure that you understand who the church pension group is, because I think there's some confusion sometimes about the difference between the Episcopal Church, which is at 815 2nd Avenue in New York, and the church pension group. We're an entirely separate organization, although we serve only the church. And church pension is actually a conglomeration of 5 independently incorporated entities, and you can see them listed up here. The church pension fund itself was started in 1917 by J.P. Morgan and Bishop Fitzgerald. I can't never remember.
Somebody.
Somebody
Make it up, nobody would know.
Okay, some bishop who, J.P. Morgan was very concerned that clergy were not able to retire because they didn't have anything when they retired. They had to work until they carried them out in the box. So they got a few of their wealthy friends together and had a big dinner and lots of cigars in New York and created the church pension fund. And it actually was created in 2014, but it started paying its first pension benefits out in 2017. So we're coming up on our 100-year anniversary. 2017? You know, you need to pretend like you heard what I meant to say, not what I said.
Been ready to get my check.
Yeah. So all of those entities that have an asterisk by it are companies that provide benefits to the Episcopal Church. The one that doesn't, which is church publishing, was started in 1918, and it is the entity that publishes the hymnal and the prayer book and lots of liturgical and spiritual materials that are available to the church and to other entities and individuals outside of the church. Then the next entity is Church Life Insurance Corporation, and it was started in 1922, and it's the entity that provides life insurance, disability insurance, and some annuities and that sort of thing. The church insurance companies is the property and casualty, and I don't know if anybody was over in Jack Rutledge's presentation or if you've met him before. He's your agent to the church insurance companies, and they provide lots of, as you heard, a big list of wonderful coverages for you. So Jack is your representative. If you have any questions, you can contact him, and Julie knows how to reach him. And then finally, there's the Episcopal Church Medical Trust, and the Medical Trust was created by General Convention in 1978. It's an entity of General Convention. All of these companies report to the Church Pension Board trustees, whom you elect at General Convention every year. And then just so you kind of know how we work, there's these 5 companies, but we all are under one big umbrella, and this is a picture of our new building that we just moved into at 19 East 34th Street in Manhattan. And so if you ever come to New York and want to visit anybody, we love to have you come and visit. But internally, we're organized so that there are business units that cover operations, policy, client engagement, that sort of thing, that cross the different companies. We just kind of went through an internal reorganization, but basically we're there to make sure that you get the benefits that you need. Any questions about that? I just want to give you that little bit of history. And one other thing I should tell you is that when the Social Security system was being thought of, it was modeled after the church pension fund. And our Social Security system really operates very similarly to the way the church pension fund operates. The church pension fund has $11 billion in assets, and it suffered a little bit during the debacle that happened a few years ago, but not nearly what many funds suffered, because we have such a good investment policy and investment committee, and we're really very conservatively operated. So, anyway, let's talk first about clergy pension, and I'm going to let Kate do that.
We're going to tag team a little bit today. So most of you I know about clergy pension. So I'm just going to remind you that the clergy pension is 18% of the assessment for clergy. And that goes for all clergy who earn at least $200 consecutively for working for 3 months in the same employer. Okay? So that 18% does include their housing allowance. Okay? So if you've got more questions about what that includes, remember that we have a great client engagement team. We often use acronyms at CPG, or Church Pension Group, and that you might hear us call CE, so client engagement. And if you ever have a question about what might be included, client engagement is a great resource to go to as well.
And I want to just remind people, reiterate what you said, is we often think of our supply priests not having to pay a pension for, but if they work at your church for more than at least 3 months in a row and make more than $200 a month during that time, you need to pay them. You need to pay their pension. So, you know, I think churches get tripped up on that sometimes.
So it's 18%.
Could I, you've got cash stipend, what they get, Social Security offset, utilities. Is that what they pay for their housing utilities? Is that what you're saying?
It's as if the employer, if the church employer is paying for the utilities.
Oh, okay. If the church, in other words, out of those four things, what the church itself is paying, then that's the funds you use to take the 18% from. Is that correct?
Yes.
So anything that they're paid by the church, any
I
kind of
gotcha.
cash payment, any time of one-time payment,
Gotcha.
that's all that's assessed. Yes. So a reminder, when a cleric retires, the basic benefit is determined by the calculation of their HAC, another acronym that we like to use, HAC, which is the highest average compensation over 7 to 8 years from when they were a cleric. So it's really important to pay their assessments on time. If it gets 6 months behind, they can lose their benefits. We want to be sure to remind everyone that when you receive those notices about the payments, that you keep their pension payments paid on time. I'm going to give you just a minute to look at the screen. So that talks about the years of credited service that's on here. Does anybody have any questions? I know clergy pension can be a little bit confusing and complicated and lots of questions.
Why is it 7 or 8 years? Why isn't just 7 or, why isn't just one of those two?
It's the highest, so it's the highest of 7 of 8 years.
It's the average of
7
7
to 8 years.
over an 8-year period.
Oh, okay.
So, and it's the highest 7 consecutive years that you have in your tenure.
So when you say paid on time, it's due quarterly. We had been paying at the beginning of the quarter, but because of cash flow, we decided to pay it at the end of the quarter. Does that kind of matter?
It only matters if you get behind. So if you get 6 months behind, they
As
can
long
lose
as
their
it's all
benefit.
paid, then fine.
And you have 2 years to be able to get that made up. So if you fall behind, you have a 2-year period that you can get those things caught up.
But as I understand it, if you're 6 months behind and let's say your clergy person dies when you're 6 months behind, there are no spousal survivor?
You lose your survivor benefits, you lose the life insurance policy. There's some things that you lose, so it's
And-
really important to stay
Right,
caught up.
You lose your disability insurance, so if you get disabled and the church is more than 6 months behind.
Better
so
make
as
sure they make those
clergy, you
payments.
do not want
Yeah.
to let your church get behind. I know our churches that are in financial difficulty, it's one of the things they stop paying, and it's just not fair to the priest to do that.
On the 5th bullet down, years of service, what do you mean there? Beginning January 1st, 2013, compensation of 18, I can't read, 16,
That
18,
very last
18,200
or more will earn a full year of CS.
credit service.
What that,
What does that mean?
this was a new rule that was put into place in 2013 because there were places across the country, they have a part-time cleric who was making $10,000, $12,000, or maybe even part-time and making $24,000, $25,000. And they were not getting a full year of credited service.
I see.
Or, even more importantly, somebody who's working full-time, but working in a ministry that doesn't pay well, and maybe only making $15,000, but they're truly working full-time. They weren't getting a full year of credited service. So the pension rules were amended to say that if you're making at least $18,200, we consider that you're working full-time, even if you're really not.
Gotcha.
So that's a full year of service as long as you had assessments paid on something that equals $18,200.
And that was effective January 2013, so part of that. So they didn't go back and give credited service, it was moving forward.
Gotcha.
And that was helpful for the number of part-time and bivocational priests that were happening all over the district. So,
No, go ahead.
oh, okay, we're in the same slide.
I think we are.
Okay, great. Sorry, we're dual monitoring here. Okay.
When you're doing that, it strikes me somewhat unfair that you would penalize the pensioner or pensionee when he has or she has no control of the money being sent and they're getting arrears. I know you watch that, but it seems unfair to penalize them.
So that's what we're going to talk about next, is
Okay.
who's responsible for what. So it is the cleric's responsibility to make sure to keep everything up to date, demographics and things with CPG. Let us know what's happening. Compensation, changing and assignment. So if you change parishes within your diocese, we want to know that you've changed parishes. But it's the employer's responsibility to pay the assessments on time. They receive the notices. So if you get behind, if a parish or an employer gets behind in an assessment, what happens at some point is the bishop will get a letter. So there's a lot of notifications that go out. There's a lot of notifications. You're getting behind. Now you're really behind. Now you are really, really behind. There's a lot of communication that comes out. I was an administrator for 4 years. That's what happens, is we're really notified that it's coming out, that you're getting behind. So these are the responsibilities that are happening. But the cleric, it does have a part of this responsibility to notify the church pension when things change in your life. Yes, sir?
Is that something that occurred because the clerics would occasionally say, well, you don't have enough to do that, why don't you just defer my pension payment, without realizing what damage they were doing to themselves? I mean, they were trying to be really good, but in fact, they were being self-destructive.
I wasn't
Yes.
here then, so I'm going to assume yes.
Yeah, well, it's been in place for a long time, but yes, that is one of the reasons, is we don't want the clergy to be cutting their own throats by saying, it's okay, you don't have to pay my assessment for a while. On the other hand, you can't pay more than the 18%. You can't just decide you love your clergy person, so you want to pay him 25%. You can't do that.
That happens a lot.
All the time. Especially here in San Diego, I hear that a lot.
And as far as notification of information, the assumption is just about communication. We're assuming that someone else is taking care of that, but I have seen that has been a detriment for not knowing what's really happening in someone's life. So that is the cleric's responsibility. And it's a reminder, clerics are told this right away, here's your responsibility. But then you become a rector to parish and things get busy and you forget. Everyone knows that. I was an administrator, so I know that that's true.
Somebody has a question back.
Yeah.
I apologize. Yes,
I was
ma'am.
just gonna ask if, we just did this, is it any problem if those notices come like with a payment? Like the notice of new assignment, or like we just had a whole bunch of changes, like a new,
You can send those in.
clergy.
We'll take those
Just with our
payments.
payment, we were like, here's all the new changes
Absolutely.
that apply to us.
We've got some new tools that are going to be coming out, so those things will be done differently in the future. Absolutely send those out. Was that an applause? Yay.
Like for online maybe?
Absolutely. There's some new things coming. We're all about making your job easier. Yes, sir?
Before you get to after retirement, in the course of a rector's stay at a church, get salary increases. Those would definitely affect the pension, so people need to stay on top of that as an aside.
Right, and there's a form that we ask you to fill out for that. We want to know that whenever you have a salary change, so we can adjust your assessment as
I
well.
recall it's when we actually fill out and tell you what the figures are.
And there are signatures that are required for that, so we want to get those sent in right away so those can be assessed. Any other questions before we send you to retirement and when you want to work some more? Okay.
I'm already there.
So work after retirement, we just want to remind you that there are a couple of rules that go with work after retirement. And the biggest one seems to be the change with how much you can earn after you've retired. So for 2014, the largest amount you can earn is $36,000, and that does include, of course, housing. There are exceptions in special cases. But remember that exceptions for the rules for working after retirement are very rare. The fund has a lot of rules around those.
And let me just clarify that this is if you want to work in the church. This is for a cleric who has retired, who wants to continue to work in the church. If you make more than the $36,000 for 2014, you can do that, but your pension is going to be cut. And you'll be required, your employer will be required to start making assessment payments again. So you want to keep your full pension and work, you have to stay under the $36,000.
Or, but you're saying in the church. So
In the
if
church.
got
You
a
can
job
work-
in the civilian, some other.
You can go be a greeter at Walmart and make $50,000
Okay.
if you want, no problem. Also, that goes away at 72. You can do whatever you want at 72.
And remember that you can't go to work in the same church you've just retired from. Yes, sir?
I'm not following that. Exceptions, special cases. No exceptions will be granted for clergy under 65. What is that? What is that?
The first bullet there, telling me about.
That's, the rule is
Mhm.
that you can't make more than 36,000. You can't go to work from the same church or ministry from which you retired. You know, those rules, there are some exceptions. Sometimes the pension fund will give an exception, but never if the cleric is not at least 65 with 25 years.
So if he retires from the church and he's below 65, you cannot work in that church.
You can't work in that church
In
you
that
retired
church.
from,
But you can work in other churches
as long as you don't make more than
between the ages
36,000.
of 62 and 72, for example. You can work anywhere and make more than 36.
No.
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 You did not.
So the rules are that you can only earn this amount when you work in the church after you've retired, regardless of age. And the rule is that you can't work at the church you've retired at regardless of age, once you've retired. But they will make exceptions in very rare and special occasions that you have to go to the fund and say, I know this is your rule, but here is my special circumstance. Will you please look at this and try to do sort of an appeal process? And what they're saying is, they won't even look at that if you are in this category. They'll say, we won't even look at you for an appeal.
That's if you've retired and you're
Yes.
drawing church pension fund.
Correct.
But in my case, okay, all right, because in my case, I'll be retiring from the Navy at age 62, and I'll have, from age 62 to 72, I have not retired from the church pension fund, but I can continue contributing to my church pension fund,
Mhm.
and eventually, at some point,
Right,
retire.
but if you were to retire from a parish before 65 and wanted one of those exceptions waived, they
Right.
would not look at
Okay,
that.
no.
No
all right.
exceptions
Just
are
wanted to be
granted.
sure if I was in that, fell into some weird.
Absolutely.
Okay.
We don't know what the Navy pension rules are.
No, I know, I'm just, but I'll be out at 62, and then I'm gonna be working in church ministry at that point, and so
Right.
I wanted to be sure I was.
That's just one area where they won't grant any exceptions if you're in that
Okay,
category.
got it, doesn't apply.
And they only grant those exceptions in very rare situations, which we don't know. Can everyone see if you have any more questions?
So you can come out of retirement.
I'm sorry?
So you retired, you can reverse it, come out of retirement.
Come out of retirement.
Yeah, clerics will go back and work as an interim or work part-time. So. Okay, marriage after retirement. These are just reminders, these are not new rules. If a cleric, just a reminder again, if a cleric marries after retirement, the new spouse is not a beneficiary of the clergy pension fund. And you have 180 days after marriage to add them as a beneficiary, the new spouse, to your plan.
That sounds contradictory.
Well, the point is that if you marry after you're retired, your new spouse is not a beneficiary of the fund. But you can, if you let the church pension fund know within 180 days after your marriage that you would like there to be a survivor's benefit for your new spouse, you can do that. If you don't let us know within 160 days, then you can't.
And you have to buy it, right?
And you buy it out of your own benefit.
Uh,
So you're reducing your own benefit in order to give your new spouse a survivor's benefit. Then if your new spouse dies before you do,
uh-huh.
you don't get to get your own benefit back to its previous level.
Okay.
Yeah,
You better make the right choice, because it's irrevocable.
that's right.
Yeah.
It's irrevocable.
Yeah, you better love her.
Yes,
She's
your
a keeper.
survivor. Or him. Or him.
That's right.
Or him. So yes, it's a survivor's benefit. So, any more questions about clergy pension? That is clear as I can make it mud. Toni Marie gave me a lot of help here, so. So the lay pension system. So we all remember General Convention 2009, the lay pension system. So I'm gonna put these glasses back on so I can read very well. I think that might make it worse actually. So the basic rule is lay pension should be offered to all lay employees who work 1,000 hours a year under the Episcopal churches and for all employees of the schools in the diocese. The church pension offers two different types of pension plans, a defined benefit plan and a contribution plan, which is more like a 401k. There's 3 basic requirements for institutions who are under the authority of the church. For lay employees, a retirement plan for eligible employees. You have to enroll all the employees in the retirement plan and provide the minimum benefit.
And I would say that.
I'm sorry, I know I keep trying to do that every way, I apologize.
I don't know of any of our churches that have a defined benefit plan for their lay employees. To begin with, it's a 5-year vesting, and so,
Okay.
you know, all of our churches that I'm aware of have a defined contribution, which is vested in 100 right away. And unlike in the past, with this new one, you can't, there's no waiting period. You should enroll them immediately when they become employees.
How much though? We're not getting.
We're gonna,
Oh, it's 5% base.
But
Yep,
that's the
and a
defined
4% match.
benefit plan. Oh, both of them, that's
so
true for both?
the employer puts in 5%,
Okay.
and the employee can contribute up to 4%, so it's a 9% total.
So up to 5%?
The employee can put up to 4%.
Okay, but you have to put in 5%.
And the schools have a slided scale, which we'll talk about. That was changed in the General Convention 2012.
What's this 5% figure?
5% of the lay employees' compensation. Like we put 18% for
No, I
clergy.
understand the match, I know, we're the 5%, why wasn't it 3 or 6 or 1, why did we come up with 5%?
It was the wisdom of the General Convention.
General Convention did that?
Yes, yes.
Ah, okay.
Now, what if we haven't done?
I'd start doing it right away.
Yes, ma'am.
So, I work with a couple of different churches and like, literally this week, this became clear about us not having a defined benefit plan and a separate defined contribution, like I thought we were having both. Is there other language that's used other than pension? Like, because when I use the term defined contribution, I don't feel like I'm referring to a pension, the general kind of, you know, I'm thinking of it more like a 401k, a 403b, and in this case it's a 401a, right?
But I think, are you saying that you only have the,
Well, I'm not aware of any of our churches
Yeah,
that
we
have
don't.
defined benefits.
Is
Yeah,
there
but
a
funds.
shorthand for the lay defined benefit, kind of like the 401a reference for defined contribution?
We
It's
call
like
it
the
the DB plan,
Just the
defined
DB
benefit.
versus
yeah,
DC,
the
okay.
DB, yeah. It's like it's like a 401k.
No, the DC is like
The
401.
DC,
It's
see,
like
even me,
Okay, I'm gonna
acronyms,
start a new launch of using DC and DB.
DC.
So,
Are you ready? Did I confuse you?
No,
I'm sorry.
you're good.
Okay, so here's the school sliding scale. They have, in 2012, a big change. This was an amendment, C042, and they have 5 years to get to the 5% up to the year 2018. So if you happen to be a school, this is how long you have to get up to the 5%. If they're already at a percentage of giving, they can't reduce that. They need to keep moving themselves forward.
Excuse me.
Yes,
You said that only people who are working more than 1,000 hours a year are required to have a pension. Is that correct?
Yes.
Are there any other stipulations?
No,
Just that.
just lay employees.
Anything over 1,000?
1,000 hours a year.
Okay.
Average is 20 hours a week, but it really is 1,000 hours a year.
Was it 1,500 at one point?
That's the healthcare.
Sorry, I'm just thinking.
We're just trying to keep you on your toes.
Yeah.
You are so fast. So here are some of the rules. There's no age limit. An employee's brand new. First, the next month, you put them right on the lay pension system. No waiting period. So you have a new employee comes to work for you 20 hours a week and they are 72, what do? Put them on the lay pension system. Because there's no age limit. And they're working 20 hours a week, which averages 1,000 hours a year. And all employers needed to comply by January 1. I mean, I'm not saying do it tomorrow, I'm just saying that's what you should do.
What are the repercussions of, that you realize that
I'm just communicating with you what the canon says and what the requirements are.
Even if they're collecting social security.
Yes. There's no age limit and no rules requirement.
we can't go back into
You can.
going back to
You can actually, and if you want to do that, you need to contact the pension fund, because they will give you an estimate, and actually not an estimate, they'll give you a number that would take into account what you would have contributed and what the market would have done,
Okay.
so that you know how much you're
That's good.
in arrears, yeah.
You can make
You-
people
I would
whole.
encourage you to do that if you,
If we can.
If you're able.
Yeah. But at least get started making your contributions now.
But the employee has the right to say, I don't want this. They could waive it.
No, the
No.
employee doesn't have to make their
They're not doing
own
anything.
contributions, but the employer has to put its contributions in.
Well, when I'm coming at it, we had an employee, this was started January 2013, right?
That's when you had to comply with it, yes, sir.
Right, okay, and then we asked the employee, because of the difficulty in getting this started, and I don't know why until I got involved, but anyway, it was hard to start. We got it started, but we didn't get it started until actually January 2014. And I said, well, do you want to go retro? And she said, I want to part retro, I'm happy to start from here. Now you're telling me that I owe you some money. All right, well, the church, somebody's some money.
you're at St. Mary's Ramona.
Mm-hmm. Because we sent, and she signed a waiver, says, I don't want to do this, and we sent a waiver, sent it off.
That's one of those tricky ones. I don't know what your rules are.
We don't police it.
They don't police
We
it.
don't police it,
So
so,
we're content to take off this where we are now.
I mean, and she did sign this waiver, and.
so she's not
I
gonna
don't
be
know if
coming
it would
after
hold
you.
up in court, but,
Would it hold
does
us in court?
reduce.
Depends on which judge you get.
And how good their attorney, her attorney is.
No, I
All of the
don't
above.
think we need to worry about that at all, I'm just saying,
Okay.
I just didn't want to make sure I wasn't in trouble.
I'm gonna come chop your arm off.
Yeah.
You ready to move forward?
Oh, I guess that means me.
We're gonna switch. You're gonna get the extra.
Are you gonna say, when do the employees start collecting the pension? Do they have to wait till 65, or do they collect the moment they stop working, or?
If they go into retirement and they collect their pension.
It is the defined contribution plan, which is basically like a 401K. It follows all of those same rules
So that's 65.
with mandatory distributions after 7 and a
Right,
half
after
and
7.
all of that.
Thank you.
Yeah. You ready to go to healthcare for a minute then? Okay, so you raised a good point, 1,000 hours, 1,500 hours, too many weird things going on. So that's one of the things that I'm gonna touch on here for a minute. What did I do? Never mind, you do what you're supposed to do, and I'll do this.
Okay.
Okay, so you may recall something also that happened in the 2009 General Convention called the Denominational Health Plan. Were you there at that convention? That was in Anaheim, right? That is the resolution that also established a canon that requires that churches provide medical insurance for your employees, clergy and lay, that work at least 1,500 hours a year. Now, I also need to tell you that your employees are eligible for insurance through the medical trust at 1,000 hours, but they're required to be covered at 1,500 hours. So there's 2,000 hours and 1,500. You're required to cover your lay employees with lay pension at 1,000 hours. You're required to cover all employees with medical at 1,500, and all of your employees are eligible for medical at 1,000. So keep that straight. I can't make it any
like
more clear
algebra.
than that, right?
So, I know this is dumb probably, 1,500, is that?
It's about 30 hours.
30 hours a week?
Yeah, it's about 30 hours a week. And there's nobody is going to be coming down and saying, ooh, you had an employee that worked 1,501 hours. Nobody's policing this. It's up to your goodwill, the goodwill of the vestry, and the bishop's ability to enforce it. So, but we're just, as Kate said, we're just here to tell you what the rules are. So we are working with Julie in both cases, with the lay pension and with the denominational health plan, to make sure that all of the churches and other employers in the diocese are in compliance with these. Not because we want to penalize you, but just to make sure if you need some help getting people enrolled, you didn't know, you weren't making contributions, we want to be a help to you, and so we'll be working with Julie. And so if she or I or Kate come to you and say, you're not in compliance, it's not, we're just trying to help you. I just want to make sure you understand, we're just trying to help you. So, just a reminder, you all know this, you're sick of it, but just a reminder, the denominational health plan required that by January 1 of 2013, every Episcopal employer in the country, churches and dioceses, offered medical trust health plans to their employees that worked 1,500 hours a year. The diocese has the obligation to create a parity policy, which means a policy that puts lay employees and clergy in parity with each other with regard to the benefit that they get and how much the church is paying for it. So in other words, if the church has a policy of paying 100% of the clerics and families coverage, in general, the parity under the canon would say that the lay employee has to have that same level of coverage. Now, in this diocese, your policy is that the employer will cover 100% of the single employee, not the family, no dependents, except that if a cleric has a letter of agreement that says we cover the family, then that letter of agreement will be honored. Is that right, Toni?
Yeah, and there's one other little point, which is if your work, each parish is supposed to define what their definition of full-time is, and anything that if an employee is working between 1,500 hours a year and whatever your definition of full-time, then their insurance, and this is for employees both lay and clergy, it's prorated with a minimum of 90% contribution from the church. So if you do the math, most of the employees are, if you're working between 1,500 and whatever your full-time number of hours that you define for your churches, they get a 90% benefit and the employee pays 10%, both clergy and lay. What else is there on that? I think that's it. And, because churches they have to be guided by their guidelines and by our guidelines, but they have a certain amount of flexibility beyond that. We have asked each of the parishes to create their own denominational health plan that's in accordance with theirs and ours. So, we only make you do single only, but you can do full family if you choose to, and I think there's one parish that has done full family. And so a couple years ago, when this came out, a year and a half ago, we put a push on to get you to do this work. Probably about half did, and so I'm going to do another round as soon as we get beyond our move and try to get the rest of you to do a policy also. Because it's critically important when you go and hire a new priest, because the new priest is going to have to be covered by this, and they're going to want to know what our policy is. You don't want to surprise them with that after they've already accepted the job and you've negotiated their salary, and then they find out, because in a lot of dioceses they still get full family coverage, but they're not getting that, because it's a big swing in terms of the dollars.
Gary?
What if you have a lay employee whose spouse's insurance covers them 100%? Then do we still have to cover them?
No, the employee can opt out. The employer has to offer it.
Oh, just has to offer it.
The employee can opt out only if the employee has coverage through a spouse, through previous employment like COBRA type coverage, or through government coverage like TRICARE.
And I should say, our recommended policy, but it's optional, but recommended, is if they opt out, that you put an equivalent amount in 403B plan for them. And there's a couple reasons for that. The primary one being fair. It makes compensation across the board a little bit more equal, but as importantly, it keeps that amount in your budget. So that when that person quits and another person comes and needs health insurance, you've got it in your budget. So, but we don't require you to do that. The diocese, I should say, the dioceses and the missions are required to do that, but individual parishes are not. So that's another thing that why you need your own policy, because you have to specify whether you're going to do that or not.
And where would that, and would you just have a medical policy, or would that be in your, I don't.
We have a template, and you have to it would be a resolution.
A resolution
for
for vestry.
Yeah. The other thing that you have to decide, because the diocese, for this, not unlike the lay pension, the diocese decided that thrift shops and schools did not need to be compliant with this. So, but again, the individual parish can decide whether they want their schools and thrift shops to be included or not. So that's another reason why you have to have your own policy.
And this is another way that the denominational health plan is different than the lay pension canon. Because the lay pension canon says schools have to comply. They have to provide a lay pension to their school employees. The denominational health plan says the diocese can decide whether schools have to provide medical insurance. And the Diocese of San Diego has said no. They can if they want to, but they do not have to. And the last point I want to make is the idea that parity is that your lay and your clergy employees that are full-time, 1,500 hours or more, are treated the same. That technically does not have to be in place until the end of 2015. So you have some time if you need it to ramp up.
Well, except
Unless-
that we have already passed the resolution. Their rules are, we did tighten up that. Ours is in place now. The resolution was passed before, our resolution was passed and in place before the 2012 General Convention, and we just decided we were going to keep it that way. So we are
So
requiring parity.
just ignore
now.
what I just said. Yeah. Did you have your hand up or you?
No.
It's just, okay.
Okay.
George.
I'm gonna be taking a trip to New Zealand in a couple of weeks. Is under the denominational health plan, am I covered in a foreign country?
Depends on what plan you have, and you need to call the plan. If you're on a Blue Cross Blue Shield plan,
I am.
okay, call the plan, or call us, and we'll help you figure out if your plan will cover you in New Zealand. Blue Cross Blue Shield does cover most worldwide countries, and New Zealand is a reasonable country. If you're not covered by a Blue Cross Blue Shield plan, most of our other plans don't have international coverage, in which case you probably need to purchase a separate, travel policy. But, so give us a call, give the client, we'll give you the numbers in a bit. You can call them and find out.
Okay.
Okay? All right. So I just wanted to point out to you, in case you didn't know, that the Diocese of San Diego offers 7 different plans, 7 different medical plans. You don't have a lot of enrollment in some of these plans, but the diocese gets to decide every year which plans it's going to offer to employees within the diocese. The medical trust offers 22 different plans. Not all of them are appropriate for all of our different groups, so that's why we let the diocese decide. And so this year, in 2012, you guys have 7 different medical plans available to you. They differ in what the cost is, obviously. The top 3 plans are network and out-of-network plans, meaning that you can go to whatever hospital, provider, doctor, whatever you want and get coverage. You'll just get a better benefit if you stay with a network provider. The other 4 plans, the Kaiser plans, the UHC Choice EPO, and the Aetna EPO, are network-only plans, meaning if you don't go to a network provider, you will not get coverage. It will be completely out of your pocket. As I said, these plans come with different rates. What we call richness, if a plan is very rich, that means that it's very little out of pocket when you actually go to the doctor. Those plans cost more than a less rich plan, meaning you pay a little bit less every month, but you pay more when you actually go to the doctor. The top plan there is a high deductible plan, and you only have a couple of people in the diocese enrolled in that. The rates for that plan are very reasonable. They're the least expensive rates that we have. Of course, it's a high deductible plan. Is anybody familiar with high deductible plans?
I think you got both of the people that are on it. in this
Diana and
room.
George are both on it?
I'm on it.
And I'm on it.
Okay, well, good. I will tell you that they are fabulous plans for people who have high medical costs, because you know exactly how much your medical costs are going to be every year, because there's an absolute cap. Your employer's putting money into your health savings account to help you take care of some of those costs. And if you never go to the doctor except for your preventive care, any money that your employer is putting into your health savings account, you get to keep and roll over for a year when you do have medical expenses. It's a pretty sweet deal. George?
I'm surprised more people don't take advantage of it, because I'm saving money towards someday when I'm old and sick and I'll really need to have that money.
That's right.
Right now, I'm as healthy as can be. I don't need to have that money.
Well, we need to have you, and I don't know if you're having a good experience with
I'm
it.
not in for the diocese,
Oh, okay.
but
But you have a high deductible
personally,
plan.
I selected a high deductible plan.
Yeah. Well, maybe we need to have you all make some personal testimonies then during open
Right, maybe
enrollment.
we'll have you write an article for the finance and admin news or
Yeah.
something.
So I just wanted to point out that you have that plan available to you, and those of you who are on your vestries or your treasurers, and if you'd really like for your cleric and your lay staff, if you have them, to take a look at this plan, and you want some help selling it so that they understand how it could be a benefit, let us know. Let Julie know. She'll come to us, and we'll help you prepare financial analyses, all kinds of things to show that how it will benefit the congregation in terms of cost and the employee. Okay? Just want to remind you that the medical trust plans, all of them, all 7 that you offer, have preventive care at no cost. So your annual physical, those annual or age-appropriate tests like colonoscopies and mammograms and prostate exams, all of those things cost nothing, including in 2013, the Affordable Care Act added some preventive care services that are provided at no cost. This is one of the ways that we can help keep the price, the cost of health care down, is by people getting their preventive care. So if you are an employee that has one of our medical plans, please, please, please get your annual physical. And get whatever, if you have a medical issue, get that under control, because it's cheaper to do it now than when it gets to be a big full-blown thing. If you are the treasurer or on the vestry, you can encourage your priest, your parish administrator, your lay employees to take care of themselves, because it will help your church keep your costs down. So I'll get off my bandwagon now. Just a reminder, and I just want to say this again. Did you want to come in? Why not?
Just taking away the sign, so.
You don't want to come in?
In case you all were not aware, this is the session you're in right now.
Oh, that would work.
How are you doing?
Quick thing, if you all, as you end your session, those of you who are physically able, these black chairs are.
In the front row chairs.
If y'all would mind just taking one and depositing it at the registration table, that would be a great help. So, and it could be a wellness thing, right?
That's right. That's right.
Just don't trip and fall.
Yeah.
Risk management.
But you know what, your property and casualty policy will cover. I just happen to know
Yeah,
that.
we just learned that.
Just to remind you that people who work at least 1,000 hours a year are eligible. If they work 1,500 hours a year, you're required to offer it to them. So if they work between that 1,000 and 1,500 hours, they can buy it on their own. You know, you can offer it to them and they can buy it, but you don't have to pay for it.
I'm sorry, I lost track.
Health insurance.
Health insurance. Is that not, it's up there?
We're distracted by the chair movement, getting injured,
Yeah, I
which
know.
policy?
You need to get your employees enrolled within 30 days. There are sometimes we'll make exceptions to that, but they do need to be enrolled within 30 days of the date of hire. Once they're enrolled, once they're on our system, then we send out information every fall about open enrollment directly to the employee, and then they're responsible to go through our online system to maintain their enrollment.
And that's important, that 30-day rule is important, because I noticed several churches think that they can do a 90-day waiting and you can't.
You've got special circumstances for enrollment outside of open enrollment, which is every fall, right?
Open enrollment
Suppose
every fall.
somebody made a mistake on their enrollment, or the vestry thinks they made a mistake I mean, they were trying to benefit us, but we were not real happy with her
This
having
is the
to do that.
Medicare secondary thing?
No, you remember this year you had one that if you were, if you were
Medicare
65.
Talk about that, okay. We're gonna talk about that in just a minute. But
But it would be, you know,
The
we were
special
hoping to
circumstances.
change it back, because she
Bless
was
you. Thank
really hurt herself with that, and I
Right.
didn't know if that's possible.
sometimes it is. The general kinds of exceptions that we can make are if you have a change in life circumstance. You get married and you want to add your spouse, you don't have to wait till open enrollment. You have a new baby, you don't have to wait till open enrollment. But sometimes we can go back and make a change retroactive. And if you have that kind of a situation, just need to get Julie involved. We did it recently, actually, in another circumstance. So it is possible. Because, let me just say again, or I didn't say this, so let me tell you this, we are not an insurance company. We are a self-funded trust. And all of the money that y'all send in every month for premiums are really contributions to the trust. And then when claims are paid, they're paid directly out of the trust. So you all are members of the trust if you have one of our benefits. You're not an insured, because we're not an insurance policy. We're not an
We're
insurance company.
self-insured.
We're self-insured. We're basically one big gigantic self-insurance. So that's why we can sometimes make exceptions when an insurance company would say no. We can't always, because we have to make sure that the funds are in the trust to pay for claims for everybody. But you know, sometimes we need to take care of you, so we can. Okay. So let's talk about Medicare secondary payer. Everybody knows about Medicare secondary payer, is that right? Okay, so let me just give you a little primer about Medicare. Some of you are on Medicare now, maybe you even know more about Medicare than I do, but I will tell you about one specific part of Medicare that you need to know as a leader in your congregation. When an employee is eligible for Medicare and is also eligible for church or employer-sponsored coverage, which, remember, is anybody who's 1,000 hours or more or 1,500 hours or more, the church is going to pay for it. Medicare's rules say the person needs to be on the employer's insurance. And why is that? That's because Medicare wants to keep people off the rolls as long as possible. So you may have had this experience where the vestry says to the cleric who just turned 65, you're eligible for Medicare, we're going to push you off onto Medicare and it's going to save us money. Can't do that. The employee has the right to say, I don't want your coverage. I would rather have Medicare. The employee can do that. But if that's so, then you, the employer, can't give them a bump in compensation to help them cover the cost of a supplement plan. You can't pay for a supplement plan for them. You can't pay any of their out-of-pocket expenses. In other words, you can't give them an incentive to go off of your plan. That's Medicare's rules. Medicare has an exception to that for small employers. So if you're an employer that has 19 or fewer employees, and there's a whole big complicated way to figure that out, you can have your employee go to Medicare first and you, the employer, pay their secondary, their supplement plan. That's an exception. Up until 2014, those of you who are with the medical trust couldn't take advantage of that exception even if you were a small employer, because for Medicare's purposes, we were all one big employer because we're this self-funded trust. In 2013, we started negotiating with the Centers for Medicaid and Medicare, CMS, another acronym, and came up with a program to allow you all to take advantage of that. So any of the churches or other employers that are in the diocese that are small, 19 or fewer employees, does anybody in here fit that category? Many of you do.
All of us.
Yeah.
And you don't.
Can take advantage of this. And the diocese has elected as part of its plan offerings, one of our plans that we offer that's part of this. So if you have any employee, your cleric, any of your lay employees who become eligible for Medicare and want to take advantage of this, it may save you money because the special plan that we've created is less expensive in some cases. There's a little bit of a process that you have to follow. My point is just to let you know that that is available to you. So if you have somebody who turns 65, is eligible for Medicare, they only have to enroll in Part A, which doesn't cost them anything. Part A is no premium. They can enroll after we approve. There's a process after that's all approved. Julie can enroll them in this special plan, which may save you money. It may not, but it may. And you should go ahead and go through the process. If you're a small employer now and you've never had this come up, go ahead and get the employer is approved as a small employer so that when you do have somebody who's eligible for Medicare, it's pretty quick. Because that can happen anytime during the year. So I encourage you to do that. We're looking every year at expanding the number of plans that we have available to this. Right now it's just, Julie just has one plan that's offered to you, but we're looking at expanding all of them.
And I should say missions, even though you like have next to no employees, because missions are part of the corporation of the diocese, the legal interpretation that we got was that you're not a small employer because you're part of the diocese, and we have, the diocese, if you add up all the missions and us, it's more than 19.
So that's why there's some questions that I don't want to go into the details here, but I just want you to know that this is available and it might work for you and it might save you some money. Yeah.
So your fourth bullet point there is the Medicare secondary. Is that Part B or is that the Medigap policy?
This is a whole separate thing. It's not a supplement plan. This is secondary payer.
Well, then who's paying the Medicare Part B, which is what, $107 a month?
If someone wants to take advantage of this program, they don't have to be enrolled in Part B.
I see.
Because your plan through the employer, through the medical trust, will cover your Part B expenses.
Got it.
Yeah. It's a little bit confusing, and I don't want to get down into the weeds too much, but if you have questions, we can chat with you a little bit after. Julie knows how it works. Okay?
Thank you.
Yes, ma'am. So just a couple of notes about, I'm sure you've heard about it, the Affordable Care Act. Anybody here not heard about the Affordable Care Act? I'm sure you've heard about it. We are on top of it at the Medical Trust. A couple of things just to note right off the top. If you offer our plans to your employees that work 1,500 hours a year or more, you are in compliance as an employer. And anybody here that has one of our plans, you are in compliance with the Affordable Care Act as an employee, as an individual. So you don't have to worry about it anymore. There are some things that do affect you as employers, not necessarily as employees, but do affect you. So we just want you to be really comfortable that we're on top of those. We're keeping track. We're letting Julie and all of our administrators know whenever something happens. For example, last fall, you probably all got notices that the health insurance marketplace, the exchange, was coming online. Does this ring a bell? Yeah? Okay. You should have gotten one of those. Did you know that you have to report on Form W-2 the value of the health care that you provide to your employees? You don't know that because you don't. The Affordable Care Act says you have to do that, but church plans like ours got an exemption, so you don't have to. So if you're a tax provider or your payroll company says, ooh, we've got to put that on there, you don't, because you have an exemption right now. Are you holding out, does anybody in here have high income earners on your payroll? There's an extra Medicare tax that you're supposed to be paying, just so if you're not, check with your tax people. In 2014, a couple of things came into play. The individual mandate, which means everybody has to be covered by a plan, right? Everybody has to be covered by a plan. If you're on one of our plans, you're covered. If you're on Medicare, you're covered. The exchanges, which are really called the health insurance marketplace, came up. How are those going here? Have you heard anything?
You mean California?
Yeah.
We're the highest enrollers.
Yeah, ours is,
And is it
apparently
working?
our website is just a lot better than some because, well, what I had heard is because we had sort of tried it 20 years ago.
Yeah,
so
yeah.
we were a little bit ahead of the game.
Good.
Yeah. If we're in the denominational health plan, then employees of the Episcopal Church never would be in an exchange. Is that correct?
That's correct. Because
Well-
they should be covered by us. If you have some people who don't work 1,000 hours a year and they're not eligible for our plan, or if they don't work 1,500 hours a year, so therefore they're not eligible for the church paying for their plan, they may want to go to the marketplace because it might be cheaper for them to do that.
And sometimes, some of our families, interestingly enough, the priest that has a new letter of agreement, so he's only getting single-only coverage. His family, he put his family on the exchange.
Oh.
So it's making.
So you kind of need to be aware of it, but if you're on one of our plans, you don't need to go to the marketplace.
I chaired a meeting and I swear that they had said there was something about eligibility of an employer plan that disallowed a family from being on the exchange. There was something really strange, but it may be different than in their setting.
Interesting.
There are some weird rules,
Really
and I don't
crazy.
pretend to understand that part of it. I do know that if the person that's on the medical trust plan wants to send their family out, the family is not going to be eligible for the premium tax credits that might be available.
That might be what I was thinking.
Yeah. So, again, if you want to talk politics, we can talk politics. In 2015 is when large employers, those who have more than 50 employees, are going to be required to offer coverage. In 2014, you're not. You are through the denominational health plan, but not through the Affordable Care Act. And in 2018, the Cadillac tax will come into play. And I just want to give you a heads up that what that means is plans that cost over a threshold level are going to be assessed a 40% excise tax, which will further raise the cost of those plans. As our plans stand right now, most of them will be subject to the Cadillac tax. So we are looking at ways to change the plan designs, to offer other plans. Many of our groups want to continue to offer these high-quality plans, high-cost plans, because that's what people want, and they're willing to pay for it. But we know that we need to offer some others that are not going to be that expensive for churches who cannot afford to.
Let me get this straight. So if we have a $10,000 health plan and it's a Cadillac plan, then our premiums would jump to $14,000, a 40%
It would be a
increase?
40% jump on the value, on the cost of that plan.
Wow.
It's a big deal.
Wow.
It's a big
It's a
deal.
big number.
Yeah. So don't panic, because we're working on it, and there will be options available to you so that you won't have to worry about this. Okay?
But wouldn't the option be that we would have far less insurance? Isn't that what you're proposing as a solution?
I don't know what we're proposing as a solution. There's all kinds of ways we're going to look at our plan designs, but certainly, George, one of the options is that we reduce the level of coverage. Yeah. Now I know you guys are getting tired. It's hot in here. We have a couple more minutes. We do have a couple more things we want to go over. Are you okay if we just continue, quickly go through this? Come on now. Yeah.
Okay, so we'll talk about life and we'll go quickly. So the church insurance offers life benefits. And I don't believe you all don't have life insurance through the church
We
pension.
don't, because, well, the groups have to be large enough for the church to insure it, and we didn't have a large enough group. So the diocese does offer their lay employees life insurance through another vendor. And of course, clergy are covered as part of their pension group benefit.
Okay.
100,000.
Right. But I will say, and I'm sorry, let me just jump in and say
No,
this.
please chime in,
Okay.
because you know the diocese more than I do.
So we can come out and give you a quote for coverage, for life insurance coverage through each one of your parishes. It would be one rate for everybody in the diocese. The advantage to doing that is that if you enroll people within 60 days of either starting our plan or new employee, they can get automatic guaranteed coverage even if they have a health problem. So if you are looking at the need to cover some people who can't get coverage otherwise, that's a good thing. Also, if you offer our group life, anybody who takes us up on that group life, or anybody that you enroll in that group life, will be eligible for a supplemental life that they pay for on their own, again, without having to fill out a health statement or go through underwriting. So it's an option that might be interesting to you. So we can
Yeah,
talk
we
to you
should
more
talk.
about that. Yeah, we'll talk.
Okay. Disability. You all do have a disability policy. We just want to remind you that all employees should be enrolled within 60 days of their start date. I'm sorry, enrolled within 31 days.
I'm not
No,
sure.
that's life
Oh,
insurance.
I'm sorry.
I'm
I
sorry.
didn't-
I'm reading.
Okay, here we go. Sorry.
Wow, okay. Thank you all. See, I'm getting hot too. I apologize. So enroll within 60 days of their start date, correct?
And I don't think that, well, we at the diocese, because we went on the state disability insurance, we don't offer
Oh, you don't?
disability through, I don't know on the individual parish, because that would be on a parish level, they would decide whether they were
We do
gonna
have some of you enrolled,
Some
so.
of
Okay.
the parishes probably offer disability to their lay employees.
Okay.
But the important point to note there is if you don't have it and want us to come out and give you a quote, we can do that. But the important point is what Kate said. You gotta enroll them within 60 days of hire, or they're gonna have to complete a health statement.
Isn't it true that Episcopal clergy, if they're disabled, get a certain percentage of their pension? Isn't that the way it works?
You know, clergy are really very special animals, and you guys get special treatment.
And you have disability built into your pension, so,
That's what I thought.
Yeah.
absolutely.
Short-term
Should've
and
went
Would you say
long-term.
special or outrageous?
I said special. You can hear whatever you want, Gary. Okay, so just quickly a couple of tax items because I know you guys
Speed
are
presenting now.
excited about tax stuff. Just in case you weren't aware, the reimbursable mileage amount for 2014 went down from 56 to 55 and a half, and volunteers are still at 14 cents.
And it went from 56.5 to 56.
Okay, it went down a half a cent. Okay. You can pay as much as you want. You can reimburse your people as much as you want, but if you reimburse them more than the IRS amount for that year, then they pay taxes on that.
What's the amount for 2014 again?
Went from 56 and a half to 56.
Okay,
Yes.
56 cents a month.
56 cents,
And
14 for
14 for
volunteers.
And I encourage you, if you are reimbursing your employees for, I encourage you, A, to reimburse your employees for mileage, and I encourage it to be at the IRS rate. Because if you pay them anything less than that, there's a risk management issue that if they get in an accident and you're not reimbursing them at the IRS rate, as I understand it, then you're much more at risk for liability.
So just keep in mind.
Could I ask, I know that's probably a silly question, but a volunteer who's driving, what would they have to be driving to get mileage?
My home diocese is the Diocese of Utah, and we have our annual convention, our diocesan convention in Salt Lake City every year.
Right.
And we have vestry members that come up from St. George or Page, Arizona, and their church will reimburse them their mileage to drive up.
Oh,
At
okay.
14
At
cents.
14 cents.
Yeah. And that's also what, if you don't get reimbursed for that
I
you
think
as
you
an
can claim
individual.
it, you can claim it on your income.
Right, using that
I'm
for
from
the
Nebraska.
deduction, yeah. If you're not required to reimburse,
I was gonna say.
yeah, but some churches do. And if you reimburse a volunteer at more than 14 cents a mile, that's
It's
taxable
income.
income. The second point is that last fall, the Supreme Court struck down a part of the Defense of Marriage Act. What that means by a ruling in September, I think it was, what that means is same-gender marriages that are legally performed under the laws of a state where those are allowed are considered valid for federal tax purposes. And that's even if they live in a state where they're not allowed. So for example, in Utah, they're not allowed, they'll probably never be allowed. But if someone got married in a state where it was allowed and then lived in Utah where it's not allowed, their marriage is still considered valid for state tax purposes. So, just so you have that
For
in your
state
mind.
tax purposes or for federal purposes?
I'm sorry, for federal. Thank you, Gary. It is getting late. Just the heat. Small employer healthcare tax credit, and have any of you taken advantage of that? You can get some money back.
Yeah.
This is money you're leaving on the table. I'm not gonna go into the details. 2013 tax year is the last year you'll be able to apply for it. Go onto our website, read the memo, see if you're eligible, see if you can get some money back. Julie says she's gotten money back. Okay, thousands of dollars you're leaving on the table if you're not doing it. SECA reimbursement, are you all familiar with SECA reimbursement? Let me just tell you what it is. Again, George, clergy are very strange animals. You are considered employees for federal income tax purposes, but self-employed for Medicare type purposes. So your employer should not be taking out FICA or paying FICA on your behalf. You are responsible to pay SECA. That's self-employment taxes. Is this unfamiliar to any of you? Okay, so some employers will reimburse their clergy the amount that the clergy would have to pay for SECA to put them kind of on an equal basis
Half.
with it, half of it.
It's half.
If you do that, I don't know if you do and you're not required to, if you do that, what you reimburse them, the amount you reimburse them is assessable for pension. Just a reminder, that's assessable for pension, okay? And then the last thing is, there was a court case in Wisconsin that said that the clergy housing allowance, you know, where clergy get to say $24,000 of my income is not taxable because I'm claiming it as her clergy housing allowance. There was a court case in Wisconsin, a federal district court, who found that to be unconstitutional. So don't worry about it because it has to go all the way through appeals before anything is going to happen. Were you familiar with this, Barry? No? Okay. But you may hear rumblings about how that's going away. Who knows? Because it has to get all the way through years of appeals before that might happen. So just wanted you to be aware of that. Just a couple of other quick things. Anybody who's an employee in the Episcopal Church will soon have access to your benefits online to see what your pension benefits are, what your health benefits are. You'll be getting information at home about how to enroll. So just be on the lookout for that. We have a safeguarding program. If you're not using it, it's available. It started out with a paper-based thing. It's now available online. It doesn't cost you anything.
We're about to roll that out in the diocese.
Okay.
So stay tuned.
Stay tuned. You'll get some more information about that. We also have a background check program. You should be doing background checks on all of your employees, lay employees, clergy employees. You probably should be doing background checks on some of your volunteers.
And you can have those processed through us because we're set up with Presidium for lay employees.
And I'm just going to do this last one.
You go right ahead.
Okay. So resources, I just want to make you aware that we've gone over a whole bunch of stuff. I've only probably peeked more questions that I've answered. So our website, cpg.org, has everything we've talked about. Guides for all the benefits, clergy pension, lay pension, all the rules, all the medical services, everything is on there. If you have individual questions, you didn't understand something, call Claim Engagement. This is their phone number. They have an email address. They're wonderful. They belong to us. They're our employees. They're not Peggy in Romania. And they're specifically trained by us, and they're very good. So call them if you have any questions. I am required to tell you from our legal department that I'm not giving you any tax advice or any legal advice, and anything that I said or Kate said that's contrary to the actual plan documents is wrong. Plan documents control. You can't sue us because I've told you that disclaimer. And we're 2 minutes. Does anybody have any questions we can answer in 2 minutes? You have been so patient. I hope you got 1 or 2 nuggets out of that.
Thank you.